All right, this is Maximus Analysis for a weekend edition going into the 15th of June tomorrow, and kind of wanted to just explain that the ES gap down due to a contract rollover from the M contract to the U contract. I think that's the September contract. So here's what we got to look at and make sure we look at regarding or be aware of regarding going into the week. I could continue down, and I think it's definitely in a state of weakness, but any gap up into this area, we have to be very, very careful of. Reason being is that the big boys, again, they're not going to let them take billions of dollars and just get hosed because of a contract rollover. So we got to see if the invisible hand, the Fed, whoever we want to call them, is going to gap it up so these guys can sell their stuff that they're trapped at basically this level right here. So they might be trapped in some stuff at 2106. It closes down here. They're not going to let them take a 20-point rip down on so many. Us, retail, yes, they will let us, get destroyed. But any gaps up need to be held with some caution. And again, above 21.15 area is what you need for the long side. 21.15, 21.20 area for the long side. They've continued to test this 20.80 area. You can see the low is 20.82. Closing there the low. So again, if you see anything regarding this week, if you see a huge gap up overnight, it might be that they're selling, or basically they're letting the big boys get an opportunity to liquidate their stocks, which they might have been doing all of this time as well. So we just have to be aware of it. And I think I just wanted to state that for you guys watching. NQ stuff is continuing to look weak. YM, same thing, gap down. If it's a contract rollover, I'm not sure YM, but it's the same thing. Again, be very aware of continued weakness, but a gap up does not mean that all of a sudden we have to see a gap up and follow through the next day, not a gap up, because they could just gap that up to fill their orders to make sure that their friends don't get hosed, and then they hose the rest of us. And that, if you've been around the market, you know that that's typically their style. YM looking okay. Apple still very sideways. Again, needs to break something. And Google showed some weakness as well. It's just, again, sideways, right? That 50% retracement that we've been talking about. Tesla still needs to get above that 254 area to see back at these 290 highs. You got Netflix. Again, this is not a name to be shorting at all, but again, just a little pullback, nothing crazy. Amazon, you have, again, it's just sideways action, and I would not be shorting this unless it broke down and gave me something significantly, something technically that we have to see going on. We got let's look at some of these down names, which I did with Goldman. Goldman's continuing to look up. Can't short into that, but again, the heavy names that they typically been using is Apple, Goldman. I think they've been manipulating some Home Depot as well, so you'll see some gap ups and stuff like that. I think what is it, United Technologies? They've been using that one. Just dog names that you're just like, where the hell are they coming from? They'll gap up or have some big moves on CAT and stuff like that, but don't let them sucker you in unless you have some true technical mojo behind what you're looking at. You got crude. Again, crude is still, it was very sideways, very, very sideways on Friday. So we'll see how it had only like a 73 tick range for crude. That's really low as well. So again, we'll see how this one plays out. See whether they're going to break it either up or down. And it's just trading sideways, but the overall trend is down. So we'll see if they're going to have any juice to get it over that $64 range. You had bonds continuing to not look that good as well. You had the dollar. It needs to hold this pivot area, which it could. Again, it hasn't broken too low back. So again, we'll see if it holds this level, because if it rips to the upside, that's not good for gold or oil. And we see that we just have gold is dripping down to the downside. So we want to make sure, again, that we see that we're in a dangerous type of area. And again, look at this. If you look at the beginning of the year right here, it's not really giving much at all. And if you look at the bigger trend, I don't know where we are in regard to this. I mean, if you're looking at Elliott wave, maybe you're saying we're in a third wave. I'm not sure. But I am sure is that they need some type of retracement, because this has gone a long time. And I don't know if or when it's going to happen. But again, it's just been drifting sideways. So we just have to see if this is some type of accumulation pattern. Historical patterns, something like this can be very ugly. Something can, and I don't really want to say like 87 or 2000 type of stuff, but again, don't just blindly say this is a dip I want to buy based on boredom, because if you're getting nicked all the time during this price action, when it goes down and gives you a clear sell signal, you might get paralyzed because you just don't want to get hit so many times. So again, a lot of people are frustrated with the price action. That means that you sit on your hands and you wait for a clean setup to come. Take care. We'll see what happens Monday, but be very aware of, or very leery of overnight gaps right now, because again, that contract rollover, they're not going to let their friends get hosed. Retail, yes. Big boys, they look out for one another. So be careful.